What's going on, guys? Hope you're all having an amazing Thursday. Today's September 25th, 9:18 in the morning here in Arizona, and wanted to quickly keep you guys up to date with what was released today. Why did we see such a significant sell-off right into the open? But we've kind of recovered from it. So a quick little update on the day. I was up over $4,000 on my short on Iran, however it is you want to pronounce it. It consistently sold off. It hit lows of almost like 7.5, almost 8% in the red. I did a beautiful job taking profits during today's live trading session. Friendly reminder, if you ever want to watch me trade live very quickly, second link in the description down below, and you can watch me trade live starting tomorrow. With that being said, Irene began to recover, became overbought, and I re-entered my short position. I've given back some of what I've gained. Now I'm only up 3,800, but there's huge downside potential. Let me make this very clear. I'm not like all the people that you follow on x.com or on Reddit. I don't want you to copy my trade. My trade comes at a huge form of risk. Shorting is not safe. It's not meant for beginners. I just love sharing my ideas just because, again, I like to follow up. And if I make money, great. And if I lose money, I recap those too. I think there's something so amazing about being able to share ideas, not because others should copy, but because you want to understand the edge or the thought process behind it. Very simple. I think Iran is a piece of shit company. I think it's incredibly overvalued and overhyped up. I think its fundamentals are a complete joke. But again, in a market full of greed, it supports irrational valuations. And because of that, it comes at a great form of risk. But it's retesting previous resistance range. There's some pretty decent downside. And if we look at what the potential is for a short position, again, I see there to be greater potential downside intraday than the potential for risk of this thing to uptick. So again, the risk is still there, but my downside potential is greater than my upside risk based off of this short and how I plan to manage and mitigate risk. Now, going into what we should be talking about, and that's the Nasdaq market. We saw an aggressive dip right into the open, kind of more, in my opinion, panic selling. And then we've seen a sharp recovery. Markets are still bearish. They're still slightly in the red. Let me rephrase that. Markets are still bearish today. Markets are incredibly bullish on the larger time frame. Don't get it twisted. Different time frames give you different perspectives, and on the day chart or on the 4-hour time frame, this thing is incredibly bullish and is showing no signs of it slowing down. This is a pullback. Pullbacks happen all the time. Pullback here, pullback there, pullback there. This is, again, I'm not here to celebrate this pullback because we all know that market sentiment is still in favor of the bulls. So let's respect that. I think it makes more sense that regardless if I agree, right? I think markets are irrational. I want to see markets completely crash. And the reason I want to see markets correct themselves because I want to be able to pick up good deals. With that being said, at least it makes more sense. If you were buying at all-time highs, it made no sense then. Everyone knew that it was elevated and that they were, overpriced and overbought levels. At least now markets pulled back a bit where you're able to pick up something, or at least you were able to pick up something for a decent deal. I hope that we see more downside. There is still a little bit more downside to the moving average. If we end up retracing to that, that would be 580 for QQQ. But again, it's still too early to tell. As of right now, we're coming back up to retest that moving average and that EMA line on the 1-hour time frame as a potential resistance. Or if you look at this on the 30-minute time frame, you can see this consistent descending pattern with lower highs and lower lows currently getting rejected by that EMA. Again, indicators are to be used as a reference, never as a sole reason on why to take a trade. But with that being said, yes, in these shorter time frames, markets are bearish. Why? Well, there's a handful of economic reports that were released today. I sent this to my LPP team. Again, they are the team that get to watch me trade live every day. Today's economic report highlights job claims came in at 218,000 versus 232. So this is the initial claims. For those that don't understand, again, you guys all have access to this. If you don't, go to techbudsolutions.com/trading tools. It's a free economic calendar. You click under today. It's best viewed on desktop, not on mobile. With that being said, there's a handful of different reports. One of the big focuses right now is the labor market. Initial claims are the number of people that file for unemployment for the first time. It was less than what was expected. So there's less people filing for unemployment than what was expected. That is supporting the case that maybe the labor market isn't slowing down as much as what was expected. That maybe would support less rate cuts. But everything else kind of supports rate cuts because the GDP estimates came out pretty much much better than what was expected. When you look at the PCE prices, tomorrow we have the PCE report, but PCE price came in at 2.1% versus expectation of 2.2%. That's not bad. Everything has come out just fine, right? And that's what I wanted to highlight here. PCE price came in for Q2 at 2.1%, down from 3.7% in Q1, showing that even with tariffs, we're seeing prices come down, supposedly, right? Consumer spending in Q2 came in at 2.5%, up from 0.5% in Q1, showing that consumers are still spending, continuing to spend, which is similar to the retail sales data that we saw last week. So again, supporting the case that maybe things aren't slowing down as much as originally was anticipated, especially if it's beginning to uptick as interest rates begin to get cut, then maybe this can boost even higher. So again, none of these reports were terrible, like none of them. Even the initial claims and the continuing claims, the people who continue to file for unemployment, came in a little bit lower than the week prior. That's not crazy. Tomorrow, in my opinion, is the big day. It's the PCE report. That's going to be 1 hour before the market opens. I'll ask you guys. I do not necessarily want to, because that means that it's at 5:30 in the morning here in Arizona. I live in Arizona, which is closer to the West Coast. So I have to wake up very early. But if you want me to, I will go live 15 minutes before this report gets released, which is 1 hour before the market opens. So I plan to go live at like 5:15, 5:20 a.m. and we can watch the report together. If you get this video to over 1,000 likes, and it needs to have over 1,000 likes by tonight at midnight, because if I go to sleep and I see that we're not there, I just want to make sure enough people show up. If you guys don't want me to, trust me, I don't care to wake up super early in the morning. I'll do it if enough of you are willing to show up. So again, get this video to over 1,000 likes. Make sure you subscribe to the channel, and we can watch the market react to the PCE report, which is the Federal Reserve's favorite measure of inflation. Jerome Powell has made that very clear. And remember, inflation is super crucial right now. If this inflation report comes in higher than what was expected, 2.9% or 2.7%, then get ready for markets to drop even more. If this inflation report comes in lower than what was expected, possibly an uptick, because if lower inflation is coming in, then that can support more rate cuts. The Federal Reserve being able to be more aggressive, because remember, they've said it very often. They are data dependent. So again, tomorrow, PCE report, that's the big report. And there it goes. We just cleared a little bit over $4,300 on the day. It looks like we're going to be approaching that moving average support. But I still intend to hold this short as we get, I think, just my 2 cents, do not copy this. I think markets are going to sell off going into the concern of de-risking into tomorrow's PCE report. So markets had a really sharp recovery. I don't think markets are going to hold up here. Just my 2 cents. I can be completely wrong. But I think that as markets begin to sell off, overall markets, it will cause these elevated piece of crap companies to also retrace as well. Because remember, when overall markets do not support their own valuation, they definitely won't support irrational valuations. So it's always the irrational stocks that see the largest retracement. That's why at one point today, it's still down. Oklo is down 10% on the day. So I tried shorting it, direction went against me, and I kept my loss pretty minimal, $263. Position is fully closed. But again, it's always the most overvalued stocks that see the largest retracements when markets begin to dip. So this is just a heads up. Do not be leveraged at overbought levels if you can't tolerate the downturn. It's not a threat. It's literally just a reminder of stay level-headed at elevated levels so you don't get margin called when direction turns against you. I want to see you win. I don't care if you're going long. I don't care if you're going short. I want to see you win, but in an intentional way. Be calculated and be mindful of your position size. We'll talk about this a little bit more in tomorrow's live trading session. Like I said, I trade live every single morning, and whenever you're ready to tune on in, it's the second link in the description down below. You can literally join LPP, and it breaks down to for $1 a day. So if you want to watch me trade live starting tomorrow, second link down below. We'll see you at market open. Take care, team.